You know what's wild? Some of the smartest people I've met are broke. And not because they're lazy, not because they don't try. In fact, some of them work harder than everyone else. They clock in long hours, they save, they even invest, but they're still stuck. Why? Because they keep making the same 7 mistakes that quietly drain wealth before it ever has a chance to grow. These aren't loud, obvious mistakes. They're silent leaks, the kind that make your money disappear little by little, until one day you look up and wonder, where did it all go? I've seen it happen to 6-figure earners, to side hustlers grinding after work, even to investors who think they're doing everything right. And the truth is, if you can avoid these 7 wealth killers, you won't just be doing better, you'll be ahead of most people who ever touch the market. Before we dive in, do 2 quick things for me. Hit that subscribe button so you don't miss future wealth plays, and drop a comment below telling me what's one money mistake you'll never make again. Because your next level of wealth starts with not repeating the same old traps. Let's go. And here's where it usually begins. The slow, quiet downfall of so many smart people. They don't lose money because they never tried. They lose it because they hand their financial future to someone else's opinion. Mistake number 1, copycat investing. Let's be real. If your entire investment strategy is, well, someone on YouTube said this stock is about to blow up, that's not a strategy. That's gambling with a nice thumbnail and a catchy title. You can't build wealth off someone else's conviction, because when the market dips, their conviction won't pay your bills. When things go sideways, their risk tolerance isn't going to calm your anxiety at 2 a.m. This is where a lot of people mess up. They want the rewards of investing without taking responsibility for the decision. But real wealth doesn't work like that. You have to own your moves. If you're going to put your hard-earned money into something, you need to know what it is, how it makes money, and why you believe in it. Because here's the hard truth. When you invest based on hype, you're not investing, you're outsourcing your future to strangers on the internet. Don't do that. Your money deserves more than a guess. Your strategy should be built on your understanding, not somebody else's excitement. And here's the best part. When you actually understand what you're investing in, market dips stop feeling like panic attacks and start looking like opportunities. And here's the thing. When you stop blindly following what everyone else is doing, you're left with the next big question: what's your plan? Because that's where most people trip up next. Mistake number 2, not having a real plan. A portfolio without a plan is like a road trip with no destination. You're burning gas, going somewhere fast, but you don't actually know where you're headed. And the worst part, you won't realize you're lost until you've run out of fuel. See, it's easy to invest when everything's going up, but when the market dips, and it will, people without a plan panic. They pull out at the bottom, they make emotional decisions, they let fear drive the wheel. But when you do have a plan, you don't flinch when the road gets bumpy. You know where you're headed, you know why you're on the journey. You keep your hands on the wheel, while everyone else is swerving off the road. That plan doesn't have to be complicated, but it must answer some key questions. What's your time horizon? Are you investing for 2 years or 20? What's your actual goal? Financial freedom, retirement, cash flow, growth. What's your risk tolerance? Can you stomach a 30% drop, or will you tap out at 5%? When you're clear on those 3 things, the noise doesn't shake you. The market can scream, social media can panic, headlines can flood your feed, and you'll still know exactly why you're in the game. Because clarity is power, and in investing, clarity is what separates the calm from the crowd. And once you finally have a plan, there's something even more important, actually knowing the game you're playing. Because here's the harsh truth. You can have the best map in the world, but if you don't understand the rules of the game, you'll still lose. Mistake number 3, playing a game you don't understand. If terms like price-earning ratio, cash flow, or 10K sound like another language to you, that's not a sign to quit. It's a sign to pause and learn before you leap. This is where a lot of people fall into what I call blind ambition. They want the returns of a seasoned investor, but don't want to put in the time to learn what seasoned investors know. And that's like stepping into a poker game, where everyone else knows the rules except you. Guess who walks away with empty pockets? There's no shame in not knowing, but there is risk in pretending you do. That's why ETFs and index funds exist, to give you a way to grow while you build your knowledge base. Don't let ego rush you into bets you don't understand. Learn the language of money before you try to speak it fluently. And once you understand the rules of the game, there's another dangerous opponent waiting for you. This one isn't on Wall Street, it's in your head. Mistake number 4, investing emotionally. Here's a secret: wealth doesn't grow on emotions. The biggest losses don't happen when the market dips. They happen when people panic. Fear makes people sell at the bottom. FOMO makes people buy at the top. Either way, emotion is calling the shots, and your wealth pays the price. The market rewards discipline, not drama. If your heart rate spikes every time your portfolio dips 5%, it's not the market you need to fix, it's your mindset. When you invest with emotion, you're reacting. When you invest with a plan, you're responding. There's a difference between chasing hype and holding conviction. One builds wealth, the other builds regret. And speaking of emotion, nothing turns a dip into a disaster faster than putting in money you can't afford to lose. Mistake number 5, risking what you can't afford. If your rent money is in the market, you're not investing, you're gambling with your future. When your entire financial stability depends on a stock going up, you don't make rational decisions, you make desperate ones. Your emergency fund is not your investment fund. Your savings for next month's bills is not your ticket to quick returns. You can't build a skyscraper on a shaky foundation. Build your base first. Stable income, emergency fund, debt under control, and then invest. Because real wealth grows on stability, not stress. And once you do have money to invest, here's the next trap people fall into. They fall in love with one stock, one company, one can't-miss opportunity. Mistake number 6, putting all your eggs in one stock. No matter how sure it looks, over-concentration can wreck everything you've built. One bad earnings call, one CEO scandal, one global shock, and suddenly your sure thing becomes a very expensive lesson. Diversification isn't boring. It's protection. It's the difference between taking a hit and taking a fall. You don't build wealth by being right once. You build wealth by surviving the times you're wrong. And finally, even if you avoid every single mistake I've mentioned so far, none of it matters if you make this last one. Mistake number 7, quitting when it gets hard. The people who build real wealth aren't always the smartest. They're the ones who stay in the game the longest. Most people panic during a red week. The wealthy, they're thinking about the next decade. It's not about timing the market. It's about time you spend in the market. If you quit every time it gets uncomfortable, you'll keep starting over. But if you stay consistent through the highs and the lows, you give your money the one thing it needs to grow. Time. Don't let a bad month make you miss a great decade, because consistency beats timing every single time. Here's the thing about those 7 mistakes. They don't crash down on you all at once. They creep in quietly. They feel harmless at first, but over time, they're the reason some of the smartest, hardest working people stay stuck, while the disciplined ones quietly build wealth and freedom. And I get it, because most of us weren't taught this stuff. We learn by bumping our heads, making money, and then watching it disappear. But the difference between staying broke and building wealth isn't luck. It's decisions. Small, consistent, boring decisions that compound over time. So here's what I want you to remember. You don't have to be perfect. You don't have to know everything. But you do have to start making better moves. Stop copying other people's plays. Know your plan. Learn what you're investing in. Keep your emotions in check. Protect what you build. Spread your risk. And most importantly, stay in the game long enough to win. If this hit home for you, Do me a favor. Drop a comment and tell me which of these 7 mistakes you're leaving behind starting today. Then hit that like button and subscribe, because we're not just talking about money here. We're building long-term wealth and freedom, because the best person to take care of your future is the you who starts now. Until next time, stay smart, stay steady, and keep building wealth on the edge.